All right, sorry about that, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Thursday, May 18th, 2023. Wow, this week's gone by either really slow or just extremely quick. I mean, May's really feels like May's dragged on forever. Maybe it's due to the chop, but we finally got to move. So let's go ahead and talk about it this morning. Bottom right hand corner of your screen, little black logo, click on that, turn on notifications, subscribe to our channel, make sure to like our videos, really do appreciate it as always. Let's get to work. Dow futures down about 102 points, NASDAQ up about 3 points now, S&P pretty much flat, 0.14%. We were a lot higher earlier this morning. We just got a headline from one of the Fed voters from Dallas. This is Dallas Fed President Logan. Quote, current data doesn't justify pausing rate hikes yet. So the market did not like that. The idea was that we were going to get a pause as inflation is falling anyways. So with that being said, I did tweet out a couple of things. Dollar yen, I tweeted out as well. Jobless claims came out, 242,000. The expectation was 252,000. So now it's going to get really interesting. If you guys have been with me now, at least through the pandemic, let's just say, actually no, since last year, let's just say since 2022. If you guys remember, I used the analogy of 1982 a lot. 1982 at high inflation, an old man in the office. I said the Bengals were in the Super Bowl that year. It was crazy. Like it was, Top Gun was in the theaters. There was a lot of little, obviously, similarities. Some fictional, some not. And this kind of the same premise is there in terms of high inflation. We had at that time, a very hawkish Fed Fed chairman, Paul Volcker, who was raising rates. At that time, mortgages were about 15%, 16%. So imagine that where we are now. What a difference. And then once everything subsided and then energy prices came down, energy prices were high in the early 80s as well. We also had stagflation in the late 70s. We're starting to see things thaw out. I mean, we talked about that 100-week moving average on NASDAQ. And when it comes to the NASDAQ, guys, keep in mind, that's kind of the growth, the very focused on growth. And again, if investors are focusing on growth here, it seems that it's either one of two things. One, there's a catch-up trade where people that missed the bottom in October of 2022 off that 200-week MA, like we talked about, they're trying to catch up. There's some names like NVIDIA that feels like it's never going to go down again. And then what you're getting to, in a sense, is a rotation. A lot of these banks, a lot of these investment banks were long energy. And they were saying that energy is going to soar, and energy hasn't done much since we peaked in July. Now, energy stocks have held up well, but energy as a commodity, the oil prices, even with cuts, even that's coming down. Even with the United States refilling the Strategic Oil Reserve, Petroleum Reserve, SPR. So with that being said, what I'm trying to differentiate here is the fact that you have one side that's either trying to catch up on FOMO, which we kind of saw early of 2020, April 2020, May 2020, very similar. And then you also had that similar move back in the 80s as well, as we got that really big soar job from the late 82 Q4 to around Black Friday 1987. If you guys study that crash in October. So again, you had like 5 years of pretty much solid stock market growth. Remember, guys, we had a bear market. The NASDAQ was down at its worst, down 37% from peak. So again, all of this is really just technical, but a lot of it too, the other side is a short squeeze. A lot of people were short and they got caught. They got caught with their pants down and everyone was thinking that the world was ending. And then you pretty much price everything, wars, COVID being away, tensions, gridlock in Washington, name it, BRICS, nations, energy, commodity prices, slowing growth. GDP is up 2.8% now in terms of the reading from Atlanta GDP now. That's their forecast. So we're getting growth. The labor market is still strong. The dollar is starting to firm up a little bit. So we're not too dependent on the dollar in terms of the NASDAQ. And then the other thing as well is the stock market is rising. So now the soft landing narrative, you're starting to hear soft landing, those whispers a little more, or transitory. Was inflation transitory? Kind of, maybe, depending on the perspective. But, you just got to have to trade it as it goes. And right now, what's in demand, guys? Demand is growth. Growth is being bought while defensives and those kind of industrials are being kind of rotated out. So you're going to start seeing the Dow kind of slip back while the NASDAQ kind of deviates and goes higher. We're starting to get close to those levels of 13,751 on the NASDAQ. That's your August highs. If we break that, well, guys, then all bets are off. Then you're going to start getting an ignition of a short squeeze without the Fed's intervention. And that's a really great sustainable stock market if that's the case, if we continue to grind higher. So now we're starting to discuss a part of me that I may not like just yet. We're not there yet, but we're getting close that it's going to turn into a buy the dip market, at least for the foreseeable future, where every meaningful dip is pretty much a buying opportunity. We're not at that above that 100-week moving average yet, but keep in mind that once we break that and we settle that, that's going to be your new support moving forward. And since that's a wide time frame, you're going to have a lot more to play with in terms of range. So is it right away the good time, Carlos, to go ahead and buy stocks? Again, if you're DCAing, none of this matters. But if there's any stocks out there that you wanted to buy, I mean, you're starting to get some breakouts and you're starting to get some opportunities out there. I still say it's a trader's market. And the only reason I say it is a trader's market is the fact that volatility at this moment is still too low. If the VIX was a little higher, maybe around 19 or ish, and right now we are at 17, I still think it's a little too low. I still think that we're still in a place where we can get at least a spike in volatility, whether it's a debt ceiling issue or a Fed meeting, something along those lines, or a high inflation point. I just think the VIX is too compressed. There's too many derivatives against it. And then one light of a match, you get a flush down to possibly 4,100. Now, in the perspective of everything, 4,100 doesn't sound that too terrible. But again, if you're an options trader, that's going to hurt if you're long. Now, again, if you're buying stocks here, are you trying to buy at the peak? What are you trying to do? Again, that's for another video. But at the end of the day, at this very moment and juncture, I still think it's a trader's market. Great momentum for tech stocks. And the reason that is, guys, and I want to go ahead and keep this in mind. No, the bias that I have is the fact that we're still haven't done much. I mean, we're still back into the May levels from last year at 41.64. I would like it if more of other companies came together in terms of market breadth. I wish more names were above the 200-day MA, and they're not. It's still too much of a disconnect. You know, when you start getting those advanced decline days of 90 or more, that's when you're starting getting those breadth thrusts. That's when you know you're starting to get a new pattern above a certain average, moving average or not. But I think in the end of the day, guys, I think it's really just a short squeeze, Alonzo. I really do. I mean, fundamentally, nothing has changed. Earnings were really, really soft. The problem is expectation. Everyone was expecting the world to end. You know, the Morgan Stanleys of the world were expecting that. Earnings came in pretty okay. So they're not losing money. I mean, growth isn't there. So all of this, guys, all of this is multiple expansion. Multiple expansion. That's it. Other than, you know, I mean, I can't even name names that really knocked it out of the park. Maybe Microsoft. Apple had an okay quarter. Nothing insane. Nothing to justify all-time highs, or in my opinion, not yet. You need earnings to catch up with those prices. So it starts getting a little too away from you. I still think it's a trader's market. I think that you can wait for another earnings report and see if now these earnings are justifying the price multiple. I think a lot of traders were caught with their pants down being short. I mean, we had the highest net short rating on the S&P 500 futures since 2011. This is what happens. This is what happens when everyone is short something, when the crowd is shorting. Now, is it a good time to short here? No. Is it a good time to go long? Yeah, individual names, you can play technicals. But in terms of buying stocks here, I just can't see picking out names at this point when I think you can get a better price. I still think you can get a little better of a price with any kind of volatility event because the VIX is still too low. And again, once it starts creeping to the 16s, that's where you want to start buying some protection against that portfolio. You may want to do some puts. Again, still a trader's market. That's still my bias. NVIDIA, overly extended. Yes, I've said that. I think NVIDIA is overly extended. As an NVIDIA shareholder, am I too upset? No, no. But you could see you still got a little more room to 313. In terms of the technicals, I mean, what can you do? There's manias all the time. Oh, you can call it Bitcoin mania, metaverse, NFTs, and now it's AI. So I still think NVIDIA, you could trade around it while you own it. I wouldn't write calls against it because that's going to probably be a losing strategy. But again, I still think you can trade around it and still profit from the momentum rather than just buying shares here at 301. You know, we'll see their next earnings report, see if we get a little bit of a dip. maybe we see, a chance where we can actually get in here, not on this, rocket ship to the moon either. Do you use UVEXI or SQQQ also? I don't. I don't use those derivatives. But again, if I wanted to go ahead and hedge, you could do VXX calls if you want. I don't do those. If anything, it'll just be puts, SPY puts, QQQ puts, so on and so forth. So, but again, there's a lot of other people that use, VIX instruments, and I talk about the VIX since it's very, very important to the market. I still think it's relatively compressed. Let's take a look at it. Take a look at the volatility index here, 1615. That's my alert. That's pretty much your buy alert, I would say. That's your low. But again, 1615 is a gap on the hourly. You could still see some chop, but there's a gap here, 1615. So we may have a little more room to roam here on the VIX, and room to roam in terms of the Qs, since NASDAQ is leading the way. I also tweeted this out, dollar yen. Take a look at this. Not just stocks, guys. We also have Forex. So take a look at the 2-year here. Starting to break out above the 200-day. Good place to leave a stop. Get in that break again. If we start getting a little bit of a push in the dollar, that's going to hurt commodities. The NASDAQ seems to be unbothered when it comes to the dollar, at least at this point. The Japanese Nikkei stock market is now a new all-time high. Not very bearish. The DAX, new 52-week highs. Europe is doing pretty good. These international markets, at least in their stock market, is really cooking here. Thank the Japanese yen for being so weak versus the dollar. And you can see 139.88 being a nice little target there. And then 142 will be a TP2. Not a bad setup for the dollar yen. If we go to the dollar, which we've been tracking, and you can see now the dollar is breaking above the 100-day. You would think, oh no, Carlos, that hurts growth names like in the NASDAQ. NASDAQ is unbothered right now. What you're getting, in my opinion, is just a short squeeze. Everyone was short, and now they're paying for it and getting a lot of that, that volatility that comes from, trading short when the market is up. That's what happens. You see the market pulling back to 3,800 before ripping up. Let's take a look at S&P 500 futures. Well, we know we have that 200-week, I think it's a 100-week MA, right around 4206. I expect a volatility event of some kind since the VIX is still too depressed. Not yet, but if we get to 16, something has to give, some kind of stupid headline when it comes to the debt ceiling or, something like that. Something along those lines of bad guidance, someone shorted, whatever. But we have seen the big boys like Warren Buffett add to his Apple stake, David Tepper adding more Google and Tesla, Bill Ackman buying tech stocks. It's very similar to what I saw back in 2020. If you guys remember, we did the investment video then. The bottom then was around 2180 something. Our bottom call was 2300, pretty close. But again, it was a great opportunity then. Back then, the market was pumping full of government money at that point, just printing. So it's a little easier to justify. Now we just have 500 basis points of hikes, and we're at the same place since May. So kind of hovering now. You can call it an inverse head and shoulders if you want. My target was really 4,000. I think 4,000 would probably be the floor if we break above the 100-week moving average of 4206. So again, I would say 4,200 will give you some kind of volatility event. Guys, that was just 2 weeks ago where that happened. Not exactly out of the realm of reality. Maybe right here you're starting getting to a little bit of a triple top. Again, the volatility event, who knows? Name your headline. Maybe the debt ceiling deal doesn't get through. Who knows? But that's where I would expect in terms of a floor, at least short term. At least for the next 2 months, since anything could change. But 40.54 would be my floor. 40.54 to 4,000. I think that's a great buy zone. I think with all things being considered, if you get that, that's a sale. That's a nice little discount to get into. Any plays you'd recommend on BABA for the day? Sure. Oh, sorry. I had to take away the BABA. All right. Let's see it. We're here on the daily. We just had earnings. We are up this morning. We're above the 200. That's a good sign. 95 would be a target. There's a gap to fill at 95.15. Let's see the hourly. It should be at 20-day highs. No, it's not. What was the level I had? Was it 94.15? 94.15. I haven't had really much success lately trading BABA, so it's been tough. So 96. Oh, no, excuse me. 95.04. If we go to the hourly, yeah, I would say above 91. 94. You can play the 95s for next week. There's so much volatility because it's a China name, any kind of China headline over the weekend, and that's it. So 91, 94 piques my interest. I'll give you that. But if I were to trade a gun to my head, 91, 94 break, I would target the 94 to 95 range on calls for next week. I would not do it for this week. But you're basically reacting to the setup here in terms of the earnings report that just came out. It is up a little bit, marginally, about not even $1. But it's still an uptrend on the short-term basis, starting to get close to a breakout, at least a 20-day breakout. If we go to the daily, we can see that, we are above our momentum indicator, which is our 20-day moving average on the daily. You're above the 200. Shoot, you can target the 100-day moving average to 96. So it might not be a bad swing since you got this earnings catalyst out of the way. The problem of risk is China, and that's all you can do. So let's break 91, 94. If we get that, we'll see what we can do and see the volume. Walmart, Netflix, pre-market movers. That's right. Yeah, Walmart just had their earnings. They beat and raised guidance. Netflix, I didn't see. Yeah, no problem, Trevor. Yeah, that was a tough one. We opened Palantir yesterday for calls for next week. We were in the money. I had the 10.5 calls. We were in the money this morning. Pulled back with the market after that Fed speaker was talking. S&P fell a little bit. 1031 was my alert. We got it. But now we're using that as support. We should be able to get that today. I also got into Google yesterday. We got Amazon. And I'm going to go over these trades on Sunday. This weekend, I have to go to a wedding in Colombia. So I will be out for the weekend. There will be no Friday video. Morning note I'll do tomorrow, but I leave tomorrow. Amazon, the 115 calls were in the money. We got into those last week. We got into them on Thursday. Friday, we tanked. We held the whole way through. Amazon is a testament of patience. So we got that yesterday. And we also got Meta yesterday. That was a same week expiry. And thank God we did, because we kind of fell a little bit. So that would have been a tough one in terms of theta. But I'll go over the trades that we did this week. We hit NASDAQ twice on longs. If you guys remember yesterday, the 550 level, we got that break yesterday. If you want to check the video from yesterday's morning note, 550 was the target that I had. We broke above it. Shoot, man, we got to 13,683. If you guys got it, awesome. Some great momentum here. We're above the 50% retracement on the NASDAQ futures. You can see it here based on the weekly. I mean, journey of 1,000 miles takes a single step, right? So we will see what we get. So far, so good. Momentum is there. Could be a buy the dip market if we break that 100-week moving average on S&P. All right, MU. I have MU calls. That thing has been a roller coaster. We got it and it fell. You can see it right here. And we held on to it. Thank God. We should be able to catch that this morning. So I will catch you guys on the Discord server later. Well, actually this morning, if you haven't joined us. And we hope to see you soon. If you do, catch you guys tomorrow for the next morning note. Have a great rest of your day. Have a happy trading Thursday. Let's go ahead and crush it. What time is the Fed speaker? The Fed speaker is already done. There's multiple Fed speakers. Let's go to here I did this morning's note. We had a speaker, Jefferson, Barr, and then Logan at 10. That's it in terms of speakers. And tomorrow, Fed Chair Powell speaks. Maybe we get that volatility event with OPEX. Should be interesting. Have a great rest of your day, guys. See you then.